Hello and welcome. You're watching Countdown right here on BloombergQuint Live. A second straight day where you are seeing some amount of profit taking on the Indian equities. We'll talk about all of that and more in just a few moments. Let's quickly run you through the headlines. Markets continue to face selling pressure. The Nifty is down for the fourth day today. The index trades below the 12,150 marker, dragged lower by metals and auto stocks. IT stocks are bucking the trend in today's session. The Nifty IT is the only sectoral gainer in today's trade, with most components trading with gains. UPL trades with losses after news reports suggest that the income tax premises have conducted searches on the premises of the company. And three Nifty companies, Larsen & Toubro, Asian Paints and Axis Bank, will be reporting their third quarter results today. Neeraj, good afternoon. Fourth straight day of cuts on the index. Once again back to those levels of the 20-day moving average on the index. Yeah, and banks correcting even more because the bank Nifty is down about 0.6%. Good afternoon, Devina. And it's clearly evident that banks are leading the charge lower. Look at that, 185 points. And after starting off in the green, I think it's been a steady stride downwards. In the first 1 hour itself, we corrected. And then we've been at steady move at these lower levels for the better part of the trading day today. So not a good day of trade, you would have to say. Even more disappointing because in that we started over in the red. We started off well, but somehow gave off. The market breadth should come up on your screen for just a moment, and then we'll get to the heat map. This is India VIX, of course, which has inched up even more. So that is part one. Market breadth will come up, and then we'll get the heat map up on the screen. Look at this. The advanced decline ratio now, for the while now, since that first 1 hour dip happened, has been in favor of the declines. And then get the heat map up on the screen, and let's see what's leading this charge lower on the banking side. More importantly, one, we had PSUs which are correcting today all through. So from the start of the trading day today, ONGC, Coal India, NTPC and their entire PSU lot has looked wobbly. There is Kotak Bank, which is down another 2.5%, ICICI Bank down about 1%, HDFC and Axis too are correcting a bit in trade today. And while the market breadth is even Stevens, clearly the heavyweight banking stocks under pressure is leading to this fall. What's done well? Well, some lightweight stocks, Z interestingly is in the green, HCL Tech, TCS interestingly bounce back. So Nifty IT is not doing all that poorly. And while banks are under pressure, State Bank of India and Bajaj Finance are trading reasonably okay for themselves. So 3 or 4 names which look okay. But otherwise, a lot of pressure from the heavyweight banking space. Now, what is it that the broader markets are doing? Well, the broader markets are being reactive to the earnings that have come out and kind of commentary that the managements have made. So we'll start off first with what the index has done, and it's actually outperforming the benchmark index yet again. This is what you've got in terms of the individual movers on the index. On the upside, you've got Graphite India, which is up about 3.5%. PNB Housing Finance. Remember, housing finance companies itself are doing well. Canfin Homes in particular is something that I will talk about a bit later. That's not in this list yet, but that stock and the management really promising a growth of about 20% for the company. Syngene is up about 2.5%. HEG is up 2%. What's losing is Oil India is down 5%. Bharat Electronics is down 2.9%. Whirlpool, Sterlite Technologies, Inflow Edge are all trading with cuts in today's session. The small cap index, that too will come up on your screen. Flattish day of trade, but IndiaMart Intermesh, and what a day it's had. The stock listed at about 1,200 odd. From there, it's more than doubled in a matter of a few months. And today we're getting the management to talk about the performance as well in the numbers, which was stellar. Cyient, Dish TV, Minda, NIIT Technologies, EID Parry are some of the gainers. Some of the losers are SpiceJet, Chennai Petroleum. You're seeing profit taking here. Indiabulls Real Estate is down. Sun Pharma, Advanced Research and Chalet Hotels are also trading with cuts. A few names, I just want to quickly run you through the kind of numbers that came out and the reaction. One is IndiaMart Intermesh, which we already highlighted. But the other stocks, Havells, Polycab is seeing a big cut in today's session. This is IndiaMart, about 13.5% higher. Havells, for the kind of performance it did, it opened much lower. It's picked up and I think is now down about 2.5%. It started to move a scale higher as well. But Polycab, we've seen the run up to the results. We've seen the results come out now and the major profit booking over the last 2 days. So yesterday was down 4.5%. Today is down about 6% post the numbers coming out. And Tejas Networks is the other one that I just want to quickly look at. The management clearly stating that for the year there's going to be no profitability. Stocks down about 8% in the session. But Agam, what is it that we're watching out for from futures and options space?
Well, we are looking at a little bit more weakness, the third straight day of losses for now, and as a result, we're seeing some more pressure. But it's not every day that we look at a 9% build-up in open interest while the Nifty is only declining by around 0.5%. So there certainly is a lot of selling pressure coming through for the Nifty futures. Let's keep an eye on, wait and watch whether or not this continues, because the Bank Nifty futures was also looking at another 25% increase in open interest. Moving on to the wicks, well, we have an increase, and now it's well above the mark of 16.4 to be precise. We are watching out for levels between 12,000 and 12,500, but I'm a little more interested in where the change in open interest in options is, because I suspect there is more writing around the 12,100 and 12,200 calls. 12,200 now has stiff resistance, so we'll be watching out for that. Well, from that, let's also talk about a handful of stocks which are also in focus. And well, we do have Coal India, which is under a tremendous amount of pressure, one of the top losers on the Nifty, 42% added towards shorts. ONGC, the same, pardon me, 34% increase in open interest there as well. And besides that, we have ICICI Prudential towards the gaining side. We have good buying coming through with 7% increase in OI, and Grasim among the few gainers on the index, up 3% with, well, the open interest has shed to a certain extent, but we are still looking at buying coming through.
Okay, just before we move into a corporate conversation, keep in mind that there's some talk of one more tranche of the CPSE ETF for follow-on offer coming out, and as a result of which I think you have these index PSU names coming off, the likes of ONGC, NTPC, etc. So must be that. I believe that that's the reason why these stocks are looking very, very wobbly in the session today. But what is not looking wobbly is IndiaMart Intermesh. The stock has seen its biggest one-day jump since October last year after a strong third quarter performance. Net profit doubled, while margins too saw an expansion aided by the Ind AS 116 impact. Joining us now to talk about the quarter gone by and maybe the outlook ahead is Mr. Dinesh Agarwal, the Managing Director of the company. Good afternoon, Mr. Agarwal. Thanks so much for joining in. Congratulations on a good quarter. We have some details, but let's hear it from you first. What do you think went right for you this quarter?
I think there are certain things that we have been doing in the past very well, maybe in the last financial year, and so that has been accruing. Let's understand our business model again. We have a subscription-based recurring revenue business model, whereas we offer our customers monthly, annual and multi-year subscription, and for which we collect money in advance from these small and medium businesses. So that is a negative working capital on us. So we collect monies, which is called collection, which flows into our deferred revenue. Currently our deferred revenue is 649 crores, which is about 26% higher than the same quarter last year, whereas same quarter last year we had a growth of about 38% in the deferred revenue, which has come down to 26%, which further flows into a revenue. So revenue is coming from the deferred revenue. So our beauty of the business model is that revenues are normalized over a period of 20 months or so, which is the average age of the deferred revenue or average age of our contract with the SME. So that is what you are seeing. As you can see, the leading indicators, the collections are going down while our revenues are going down slowly. So last 9 months collections have been about 15% up, whereas the revenue has slowly gone down from 30% to 28% to now 23%. Let's come back to the profitability side. As I have been telling from the listing day itself, that as long as our revenues would improve higher than our expenses, the operating margin leverage would keep coming. So in the past many years, our revenues have been improving at about 25 to 30%, whereas our cost has been in the range of 18 to 20%, which was bringing in margin gains. And last year, if you compare like-to-like basis, because EBITDA margin has an Ind AS effect, EBIT margin, which has improved from 20% to 23% in 1 year, which is like 3% over a year margin expansion. Going forward, as I see, since our collections are at 15% and our cost is at similar amount, I believe further expansion in EBITDA margin may not be possible immediately if the economy continues to be weaker. However, we are confident of maintaining this EBITDA margin. Now, coming to the PAT profitability, the PAT has a one-time impact of 22 crores, which is pertaining to FY17 when we did a demerger from Tolexo, and that scheme was under the assessment of income tax, and we have received the assessment order this quarter. So we have realized that 22 crores. So there is a one-time adjustment in the PAT, which is jacking up the PAT to 62 crores. Otherwise, the normalized PAT would have come to about 40 crores. All said and done, our cash flows from operation remains strong. So 71 crore we have generated cash flows, which is coming from operation. I think we will continue to maintain that and improve upon that over many quarters going forward.
Okay. So, Mr. Agarwal, I just want to get a sense from you. Quarter on quarter, what is the rate and pickup of subscriptions, new subscriptions versus upgradations, and also how is that supporting the average realization growth for you? Are you going to see a meaningful pickup in the average revenue per paying customer?
So in the past many quarters, we did see average realization per customer going up anywhere between 5 to 7%. But as I said, past 9 months collection, which is the trending leading indicator, we see that there has not been any increase in the prices in the past 12 months. So I do not see the realization to improve by any significant margin going forward. However, the number of customers, we were adding about 5,000 customers plus every quarter. Now we are adding only 4,500 customers plus, so which is still 10% down than our long-term average. So, and you asked about the upgrade. Most of the time, our 80% of the current month revenue comes from the existing customer, which is 1,42,000. This customer, and there we see a generally 20% people upgrading every year to the newer service, to the newer tiers, people moving from silver to gold to platinum tiers. So
all right, just with regards to new customers, obviously the digital penetration within the SME segment is a bit low at this point in time, but nonetheless there's an increasing number of SMEs that are trying to move online and get more digital. Do you feel that's an increasingly bigger market that you need to try and tap into now? And what is the scope of that?
Of course, I think given that India has more than 1 crore GST registered businesses and about 2 crore people filing in income from business and operations, business or profession. I think there is a huge scope of businesses slowly going to adopt towards internet. The mobile internet has taken off largely in the last 3-4 years. When the data prices became affordable and 4G became available everywhere. So we believe that this is the beginning of the golden age of internet, where and also given that our median age of India is about 29 years now, a lot of new age people are coming and taking over businesses or joining the businesses who are much more comfortable with adopting the technology. So we believe in the longer duration, IndiaMart can play a good role in the business enablement of the SME, be it in their digital presence, be it in their lead management, or be it in their accounting software or accounts management, or be it in the payment and credit side of it. So I think if we execute well, we can deliver a growth in the longer run better. I'm saying in the shorter run, yes, economy is going through certain challenges. It's been already four quarters where economy has been weaker. we hope that in the JFM quarter things will turn around, or in the coming quarters things will improve, and IndiaMart would have a longer duration effect on that entire SME ecosystem.
Sure. Mr. Agarwal, near term though, because of these very issues, do you reckon that both paid subscriptions as well as pricing could actually moderate JFM quarter or the first half of the current calendar?
Yes, I have already given that. Earlier we were adding 5,000 plus customer every quarter.
Now we are at 4.5.
Hardly able to add 4,500 customer every quarter. So and which would be even lower on a higher base in terms of percentage. So we would seeing a moderation of the addition in the net client, as well as I said, we haven't taken any price increase in the last 1 year given the tough economic environment. So we would also not see a rapid expansion of the realization per customer, which will probably result into maintaining our EBITDA margin and maintaining our profit margin, but no longer a rapid expansion of the EBITDA margin. It would be possible.
Okay.
Mr. Dinesh, just wanting to get a sense from you. I mean, KPMG estimates the B2B classified markets to grow at a CAGR of 18.5% for the next 3 years. You being a majority market shareholder within the B2B classifieds market are most likely to benefit from that as well. Do you see the industry and the B2B classifieds market growing at that rate, 18 to 20%? Is that achievable?
If you really see last 3 years, our own growth rate have been upwards of 20% CAGR. So there has been a lot of interest in the B2B segment. Many new businesses are being tried by different newer entrepreneurs. So I am sure 20%, 18 to 20% growth rates are possible and sustainable in the entire B2B segment.
So, you know, what kind of annualized growth rate are you expecting? 25%? Would you say that? Because that's what most analysts are factoring in as a growth rate for you.
As I said, our leading indicator is collections. Collections have been growing at 15%. However, they slowly translate into revenue. Revenue is a 20 months moving average. So depending upon if we continue to have a weaker quarters coming in the next few quarters as well, then revenue growth may come down below 20%. Otherwise, we expect at least to remain upwards of 20%.
Mr. Agarwal, there may not be an official market share metric, but internally when you look at that, have you gained quote unquote market share in the last 12, 18, 24 months?
As you said, there has not been any market share metrics, but I think we have seen that we are touching the lives of more people, more businesses, more locations all over India. We are getting inquiries from the remotest part of India. We are getting inquiries for the very unique products of India. So I think we are touching lives of more and more people. I'm not too sure if I can give you any figure in terms of percentage of market share.
Which is fine.
Our impact on the Indian economy is improving.
Okay, I have one final question, Mr. Agarwal. You already mentioned that a lot of sizable chunk of your quarterly revenue is coming in via the same customers, client mining essentially. Do you reckon that that can improve further? Are there newer products? Yes. Because I believe the pay with IndiaMart and a few other options are already there, but are there other options that are coming up which customers are accepting, and therefore the whole client mining piece might continue at an accelerated pace? Can you give us some color there?
So we continue to experiment with various options. whether it is a payment or whether it is easing out any kind of a business interaction, or whether it is easing out on selecting how to target particular buyers in a particular location, and we keep coming up with better plans which are suitable for small and medium and large businesses. So we believe that over the long period of time there is a possibility of improvement of product and thereby improvement of realization over a longer period of time. But there is nothing that I can say whether even if it is a pay with IndiaMart or anything, they are still very small to contribute significantly to our revenue of 160 odd crores, any needle mover as of now.
Right.
So I would say in the longer run they can play out something bigger, but as of now they are still very small.
Okay, just the last question from my side as well, Dinesh. Just want to know from you, have you set out an internal target in terms of what kind of a subscriber base you intend to reach by the end of this year or probably in the next 2 years to come? Is there a target of paid subscriber base that you have in mind?
I can give you past performance, which has been generally about 15% growth coming in from the subscriber addition, or about 5,000 per quarter coming in from the subscriber addition. As our base is increasing, even maintaining a 15% growth as of now seems to be difficult. So we are targeting to keep our head up over and above 5,000 net addition per quarter. And if we extrapolate that over the next 2 years, I mean, you can add, say that at 5,000 per quarter, if we add, in 2 years we should be able to add another 40,000 customers.
Okay, and the average revenue per customer also, that's a function of intermittent price hikes. Do you feel that there is a certain growth in the ARPU or the average revenue per user that you are targeting as well?
In the past, we have done a pretty good job on that. Year on year, 5 to 7% improvement in realization we have been able to take on account of two things. One, we have been able to give some price increases or pass on some prices increases into the market, as well as we have customers who have upgraded from silver plan to a gold plan to a platinum plan. Just to give you a color, top 10% of our customer base, which is more or less the same number as our platinum customer, accounts for about 40% of our overall revenue. So, and which has been remaining slowly and slowly, it's been improving from 36% to 38% to 40%. So I guess given that economy is currently going through certain challenges, I cannot comment whether we will be able to improve big time in the coming few quarters, but yes, in the longer run we should be able to improve those.
We'll leave it at that, Mr. Agarwal. Congratulations on a good quarter. All the best for the quarters ahead. Thanks for speaking to us today.
Thank you very much.
That's IndiaMart Intermesh, and the stock has done reasonably well. Well, let's see if it continues on its jolly ride. Fundamentally, forget the stock price alone. 2348 is where it's trading right now, up about 12% in trade. On to the newsmakers of the day. Some result previews, but before that, a news story. More than 250 fixed deposit holders of DHFL have filed a plea with the Supreme Court challenging the new board's decision to restart lending. Vishanandar is here for more on this exclusive story. Vishi, what's happened and why has it happened?
So earlier this month, we had reported that the lenders at DHFL, the Committee of Creditors, had decided that lending needs to start at the NBFC again. Now, remember that it hasn't been lending for months on end. So this entire process of 500 crore per month was something that the lenders had approved. Now the deposit holders are saying that if you're going to use that 500 crore to lend to other people, you should be paying us first and then start lending again. So that is essentially what is part of this petition that has gone to the Supreme Court, and a hearing is scheduled for Thursday, tomorrow, which is when they're going to be looking at this entire debate and whether this is something that can be allowed. Now remember that fixed deposit holders, because they're not really recognized as creditors, are still financial creditors. Essentially, they've given money to the company is supposed to pay them back. Now, if you consider them as financial creditors, then they are curbed under the moratorium of the IBC. IBC requires financial creditors to hold back on these repayments till the entire insolvency proceedings are over. So it depends on how the Supreme Court looks at it. Remember the past, the Supreme Court has looked very favorably towards home buyers when it came to real estate companies that went into insolvency. So we're not sure how they're going to look at deposit holders now, but that is something that is going to be tested tomorrow in court, whether the moratorium prevails or whether the Supreme Court takes a more sympathetic view for these deposit holders.
Well, let's wait and watch. So tomorrow could be a D-Day. Icici, thanks so much for putting this into perspective. And if you log on to our website, it's the top story that we have. So do log on to BloombergQuint.com and try and read more about this. Now, on to some results. And there are three key large Nifty names that will come out with numbers. In addition to that, the clutch of other important mid-sized names that will come out with numbers. We'll have some asset managers, some broking companies, and NBFCs coming out with numbers. So lots to watch out for. But the three major Nifty companies, L&T, Axis, Asian Paints. Let's get to our research. Let's get to my research colleagues to try and talk about these names. Darshan, Shefali, and Yash are joining us. Darshan, let's start off with Larsen and Toubro, and why is this so important today?
Yeah, I think the order book is more important. What the management says, commentary, that will be more important than what the numbers say. So 10% top line growth, 10% operational profit growth, which means that the margins will remain same at 11.2%. Profit, we are expecting it to be much higher at close to 17%. Obviously, the tax benefit will also kick in this time around. The other aspect is the order inflow. Now, remember, last time around they had given, at the end of last fiscal, they had given a 12 to 15% revenue growth guidance. And for the order inflow, it is 10 to 12%. Now, this quarter has been extremely weak. They haven't done orders more than 20,000 crores as per what has been delivered on the exchange. So it will be very, very important, because the run rate that they've been doing per quarter is usually in excess of 30,000, anywhere between 30,000 to 50,000 crores. And for them to meet the guidance, they will need to do more than 1 lakh crore of orders in the next 2 quarters itself. So if they're doing 20-30,000 crores of order inflow, that will be really weak, which would mean that they would probably have to cut the guidance. So that is the important thing that we need to watch out for, because of elections that are there, execution issues that are there. Order inflow has been rather slow. I don't think there's any issue in terms of the top line growth, but on the revenue front, there could be some bit of issues from the international markets, but in most cases they will be able to meet the revenue guidance. But order inflow commentary is the most important. The other important is how the balance sheet has panned out, how the working capital has panned out for the company. So that is something that also we'll watch out for in this time around.
All right, on to Axis Bank now, and Shefali. Capital raising will be beneficial this time around.
Well, yes, we can see some impact of that coming in this quarter. So the top line numbers, or the headline numbers, we are factoring in net interest income growth of 13%, pre-provisioning operating profit growth of 9%, and profit growth of 27% to come in this quarter to 2139 crores. Loan growth, we are factoring in a growth of about 15%, deposit growth 21%. So these will be good numbers as far as the business metrics are concerned. And the loan growth is expected to be driven by the retail, unsecured and SME book. And in the light of the details that we've seen for some other bank, whether there are any asset quality issues erupting in these segments, or the business momentum in these particular segments, will be interesting to look forward to. Apart from that, the slippages, we are factoring in a figure of 4,800 crores versus 4,983 crores on a sequential basis. And in this quarter, media related exposure may be recognized as an NPA. So after factoring that in, the gross NPAs are expected to come in at 5.3% versus 5% on a sequential basis, and other income is expected to come in at 3,600 crores versus 4,000 crores on a YY basis and 3,896 on a sequential basis. Margins expected to see an uptick of 10 basis points. That's a higher end of the street expectations, to at about 3.6% versus 3.5 on a sequential basis. And we'll continue to be watchful of the corporate slippages for them from the BB and below book. Remember, 2 quarters back they issued or disclosed stressed assets worth about 12,000 crores, but in Q2 they actually managed to do well. So whether that continues in this quarter, that'll be interesting to look forward to.
All right, Shefali, thanks very much for that. Asian Paints is reporting its Q3 numbers. They're up on your screens. You've got the Q3 profits coming in at 764 crores. The revenues at 5,420 odd crores. There's another income component as well. 69 odd crores is the other income. The expectation was 5,686 crores. The stock is starting to move up a bit from 1798 on the stock. Is moving up pretty quickly from the lows of the day.
Okay, and I think we'll get an analyst as well to talk about this. Yash should be up as well to talk about this soon. But 764 versus 781. Remember, this is important because we mentioned this, I think, at the start of the trading day as well, that we needed Asian Paints to come out with half decent commentary or decent commentary and decent delivery, access to not flounder too much, and L&T's numbers to look okay for the sentiment to not get spoiled. Now, with the numbers that we have had for Asian Paints and the net profit number that they are standing right now at 764, I don't know if the street will be too pleased with this number. There's a spike that has come in compared to estimates, etc. The spike that has come in, but I think the internals of Asian Paints would be important. The volume growth numbers that they put out would be extremely important as well to figure out, and we'll watch out for all of those before we try and talk more about this. The other piece is whether or not
I think
Asian Paints,
this versus number of the profit is an estimate number. 781 crores was not the number last year. It's the estimate that we had, so just a minor correction there.
Okay, so 764 versus estimates of 781 crores. Do watch out for that as well. So compared to estimates, maybe a bit off. The stock is for now reacting. It's too soon to really call it. As I said, let's wait for the internals to come out before we try and talk more about whether this is indeed a good number or a bad number. Just a couple of numbers that we have right now don't quite qualify this. Watch out for this. Watch out for the commentary from Asian Paints as well, because at the end of Q1 and Q2, I believe paint companies were largely believing that things should be stable. I think the commentary from Asian Paints right now at the end of Q3 about what they believe would happen if indeed the affordable housing segment is picking up, and whether what kind of share do they have there could well be a determinant of what happens to Asian Paints. And then, of course, people would love to extend that to what happens to Berger and Kansai and Nerolac as well. So I think they're chalk and cheese when it comes to the markets that they cater to.
Yeah, double-digit volume growth, at least for the decorative paint segment. That's what most we've been hearing about it since the last few quarters, and they've managed to do that. Obviously, the industrial paint segment, because of the sluggishness that we've been seeing in the auto industry as a whole, has been suffering for some time now. That's obviously the bigger revenue garnerer for most of the paint companies. But decorative paint, surprisingly, at least for the likes of Berger, has been working well. Double-digit volume growth, and we wait for the volume growth numbers for Asian Paints as well. But as of now, optically, EBITDA has also come in higher at 1,189 crores versus 1,043 odd crores. So it's looking like the street is pretty okay with this number. 21.9% is the EBITDA margin that has been clocked, and I think that is also slightly better off than what the street was expecting.
Well, let's get in. Devang Mehta of Centrum Wealth Management joins us right now on the show with a view on the markets at large. But Devang, since the large Nifty companies come out with numbers, and since numbers is what is the focal point right now, good afternoon. Thanks for joining in. What do you make of these numbers from Asian Paints? The numbers slightly below what the Bloomberg consensus estimates were on most counts, but for the EBITDA numbers. How would you read into them?
Good afternoon, Neeraj. Thanks for having me on the show.
Pleasure.
I think on the face of it, looks like a decent set of numbers. The thing is that with the Asian Paints, again, what we have seen being a market leader, there is always a expectation which is built in for the company, and with pricing power in for such type of companies which are market leaders in their own segment, I think clearly the numbers does not seem to be at least on the bad side, or on a clear basis, if I can say that the EBITDA margins should probably surprise the street in a positive way as well. And in fact, when crude had raised its head in the last quarter as well, if this company has been able to maintain its margins in a decent way, I think it augurs very well. So for the building material segment, as you rightly were commenting about it, the commentary becomes more important, because this time around people know about the numbers, but the commentary would be more important from the building material space. We saw about Havells as well as Polycab talking different type of languages, but I think again very clearly Asian Paints will set the tone for the paint industry as a whole.
All right, I think the stock is correcting once again, 1791 now. So it's come off from the highs of the day. I think Yash is standing by. He tracks this very closely. Yash, how have you read into the numbers? While we've got a beat on the EBITDA and the EBITDA margins, top line, bottom line seems to be a miss.
Absolutely, Devina. So the big talking point over here, at least if you compare it over the previous quarter, was that although they did better as far as volumes are concerned in the second quarter, their margins disappointed, and that was down to the higher share of their economy emulsion paints to their overall revenue mix. But this time around, the positive is that not only have they managed to meet their volume guidance, but have also done better as far as their as far as their EBITDA margin is concerned. Something that probably the street was keeping a close eye on as far as the product mix is concerned. So no real negative surprise is what is the reason why the numbers look good. But all in all, it was an inline quarter. Even the revenues came in just slightly below the Bloomberg estimate at about 5,420 crores. But rest all of the numbers are largely inline. Now the company hasn't exactly given us the figure when it comes to their decorative paint business. They say that it is in the low double-digit number for this quarter around, and most of the street or at least most of the brokerages were expecting that number to be in the range of 10 to 12%. However, there were a few analysts who were expecting it to be somewhere around 9 or 8% as well. So volumes are also good. The margin has also come in healthier. So all in all, it seems like an inline set of numbers without any negative news. So that's the reason why Asian Paints numbers are largely in line with what the street was expecting.
Sorry, Yash. So have they given the volume number? Have you been able to get the volume?
So they've said that the volume growth is in low double digit this time.
Okay, low double digit. What's the average for the first 9 months, Yash?
The average has been closer to around 14% or 12 to 14% for this year.
Okay, thanks a lot for that, Yash. So that's the initial hypothesis on Asian Paints. Devin, I just don't know if while the estimates and meeting estimates or beating estimates is one thing, the fact that the volume growth is in lower double digits, the revenue growth is just up a 3% number, up a gain of just 3%, really pleases the street or no. You might go ahead with it and all of that, but it's not something that a growth company would probably entail. But having said that, it's such a large base.
That it attracts.
Yeah.
And for the price you have to pay for
price you have to pay for it as well. Though, yeah, it has come off a little bit too, but you never know what could happen here. So Devang, actually, you gave us your initial thesis. I'm just wondering, does the paint sector interest you guys at Centrum at all? I mean, maybe not Asian, maybe some of the smaller peers, or is it an avoid right now?
No, I think clearly it excites us, and I think if you are not into a paint sector where you clearly know that probably a real estate cycle recovery would be somewhere down the line, whereas for paints you require it for the new construction as well as even the replacement demand. The cycles over a longer term period have changed from 10-year to 5-year and 3-year, where people repaint their homes, and Asian Paints now is more a solutions company rather than only a paint company. So again, the call over here is that these are market leaders, and as you were rightly talking about, analyzing this company quarter over quarter or year over year would not make any sort of a logic. It is more important to just analyze this company as a market leader, whether it surpasses all the growth approaches that we talk about for the longer term. So I think yes, 1 quarter or 2 quarter can be an aberration or a miss for this company, but it qualifies as a portfolio stock, and we normally wait for such corrections whenever those happen for Asian Paints. And here talking about the paint sector, yes, Asian and Berger generally have been our top picks in the last couple of years, and we generally keep on holding and accumulating these stocks on every fall.
Okay, that's Asian Paints for you, and a portfolio stock of sorts according to Devang, but not a cheap stock by any stretch of imagination. So trading at about 58 times, I believe Berger would still be a little more expensive than an Asian Paints as well, considering the kind of move that it had from last quarter when it reported a decent set of numbers and the markets really took to it. So Berger Paints, for that matter, 72 times more expensive than Asian Paints as well.
Yep. Well, let's wait and watch what happens ahead. Now, before we move any further with the fundamental chat, let's get in our experts on board. Manav Chopra of Enables Ventures Johnson on the show, as does Ruchit Jain of Angel Broking. Gentlemen, both of you, good afternoon. Thanks for joining in. Ruchit, let's start off with you. 1% lower for the Nifty Bank, 0.5% for the Nifty. What's the trading strategy for the afternoon?
Hi, very good afternoon to everyone. Well, Neeraj, if you see, the market has been trading in a rising channel, and the lower end of the channel is somewhere placed around 12,050 mark. Also, if I look at the previous corrective phase, then when the markets corrected in the first week of January, it had retraced the previous up move by 78.6%, and the 78.6% retracement of the recent up move is also seen around 12,050. So I think we may see another 40-50 points downside from current levels, but no, it's not a good idea to go short over here for these 40-50 points, since we have already seen a decent correction from the high of 12,400. So I would wait for some more dips towards 12,050 kind of levels, where the risk reward ratio would become favorable to create fresh longs. So my strategy on index front would be to buy on dips near 12,050, keeping stop loss below 11,950 for targets back around 12,250.
Okay. Mana, what about you? What's your sense? It's third day of a weakness now, more so for the banks. Can this continue?
Yes, more or less slightly. In fact, we did have seen this kind of a setup also, and we did highlight it last week that there was a divergence between the Bank Nifty and the Nifty, whereby the Nifty was forming a series of higher highs, which was not confirmed by Bank Nifty, and Bank Nifty also did form a bearish head and shoulder pattern. Today, Neeraj, there has been a breakdown from that pattern, and I sense this definitely confirms a short-term trend reversal. This could also lead to further sell-off, at least for next couple of weeks. I think this sell-off could be extended towards the budget time area, and the kind of call writing that has been observed at 31,500 strike and above, it's giving a very strong conclusion that at least for this month expiry, we don't see the Bank Nifty to close below 31,500 is what we're expecting, and eventually on the immediate basis we have lower targets of Bank Nifty close to we could see another dip of 3 to 4%, which is quite likely looking at the current scenario for Nifty. If the important support of 12,100, which is likely to be violated, if we see a close below that, the next support for the Nifty would be at 11,900 levels.
Okay, so in light of this, what are the stock calls? Manav, I'll stick to you first. Your ideas.
Yes, I have a sell call. My first sell call is on UPL. In fact, this stock again, face a series of resistance at the levels of 570, 575 since quite some time, and often the prices after retesting this resistance level has again tested the lower band of support. So at the current zone, since there is a strong breakdown from its support levels and below its long-term averages, it's definitely indicating a strong trend reversal, at least on a shorter time frame. So it's a sell with a stop loss of 575 for lower targets of 530. The second call would be a buy. I'm taking a buy from the cement packs. In fact, cement is one of the sectors which has acted as a strong bellwether, and we expect a good sort of at least outperformance continue in this stock. So my first pick would be on Ramco Cements. The stock after a good sideways consolidation has managed to see a breakout, but more or less this is not going to be a short-term trading bet, but one can also trade it for a medium-term perspective. It has a very strong support range at the levels of 820, and one can maintain a buy with a stop loss of 815 on the lower side for an upside target of 875.
Ruchit, what about you?
So Neeraj, since we are expecting more or less not more than 50-60 points downside from here, so I think for positional traders this correction now provides a good buying opportunity. So I have a couple of buy recommendations. One is similar to what Manav said, is in Ramco Cements. The high top high bottom structure has been seen in this charge after the consolidation phase of about 5 to 6 trading sessions. Prices today has again indicated a resumption of its short-term uptrend. So we are advising to go long over here from a short-term perspective with stop below 814 for target of 870. And Max India within the mid-cap space is another stock which has shown a breakout today, accompanied by good volumes, which is more than the average what we usually see on a daily basis. So one can go long on Max at current levels around 85 with stop below 79, expecting near-term targets of 94.
Okay, so watch out for that. The other bit is the kind of reactions that some results have shown. While the numbers by and large in the mid-cap end of the market too have looked slightly mixed bag. We haven't seen very dramatic lower reactions to companies like Havells, for example. But IndiaMart Intermesh got rewarded very, very nicely. There is some pullback in Polycab the last 2 days, but that stock has run up quite a bit as well. There are not staggeringly lower reactions unless the stock has run up well ahead. What have you made of the results that have come out thus far?
Absolutely, Neeraj. In fact, the highlight of January month is a good change from the fact that the last couple of years were very, very severe with even good quality mid caps. Of course, the markets were such polarized that initially only 6 stocks did well, and then it spread out to maybe half a dozen stocks. And now I think we are at least there are seemingly some signs that we are coming out of a polarized market, and the market breadth has improved a bit. So over there, yes, some of the large caps have also disappointed. Is one fact. Some of the mid caps have come up with good set of numbers, but the companies have run up too far ahead of expectations. And a classic example is something like Polycab, which we used to like and continue to like, but the company had run up so fast that it is correcting. Another thing is that a company like Havells, which probably has corrected so much, is not going to react so negatively to the numbers, which the street basically knew that it would be a weak set of numbers. So I think again, all in all, market is going to probably take a lot of cues from the results, and it will be a very, very individual stock based market for the next 8-10 days till when the budget takes over, and probably we get a new direction from there.
Okay. So, well, that's the view on some of these names. Today we have a few capital market linked names coming out with numbers, and watch out for Motilal Oswal as well as IIFL Wealth. Those are two interesting names that you would watch out for in the session. HDFC AMC, not a bad quarter, and the stock too has not quite reacted dramatically in either direction, but has not fallen. So that's the other interesting bit. What happens, Devang, if Axis too comes out with numbers or commentary or both, which has a few chinks in the armor? Because we've seen, while HDFC Bank was okay, Kotak not slightly iffy, IndusInd Bank, certain pockets got impacted as well. If Axis also does that, is that a near-term headwind for the sentiment in the banking space?
It surely is a near-term headwind, Neeraj, as we have seen that remarkably the last leg of this rally was sort of led by a lot of these banks, and precisely ICICI Bank or even an HDFC Bank or Kotak Bank for that matter. Almost all of those were at lifetime highs, or in fact 52-week highs, a lot of these businesses. Now with a glimpse of a result being a little bit of a deterrent for these companies and the stocks having run ahead of expectations, there is a bit of a collapse that has happened on the banking side, and that to private banks, which have generally been the darling of the market and a safe place to hide for a lot of people. So yes, if this breaks down, if Axis and ICICI were supposed to be the corporate leaders in terms of leading the rally for the market or leading the rally for at least the banking sector, I think if these numbers do not come well, and Axis today and ICICI on Saturday, then I think yes, there will be some more correction on the banking side. But as I said, some of the other market leader has sort of emerged in the last few days, if not from the large cap side, from the large mid or from the mid side, and that's why the market breadth does not look to be bad. But yes, banking does face some pressure if numbers that two private banks don't deliver on great numbers.
Okay, now I'm trying to look at companies which are trading close to fresh 52-week highs or thereabouts. So do watch out for some of those names. Also try and see if there are stocks which have either moved up or gone down in the last few hours or minutes of trade. So firstly, stocks at 52-week highs include IndiaMart Intermesh, yes, but NIT Tech has gained a bit. Ujjivan Small Finance Bank is up a bit, and GSPL and Jubilant Foodworks has done well. So do watch out for those set of names. And then companies which have gained in the last, well, despite the markets coming off a bit, companies which have gained or stocks which have gained include PTC India Financial Services, Sheela Foam, GSFC. All of these are stocks that have gained in the last few minutes of trade, and Delta Corp has gained a little bit in the last few minutes of trade. So do watch out for 3 or 4 of those names. Devang, you mentioned that there's a divergence this earnings season compared to the last, in that mid caps are not getting hammered as badly as they were in the previous 2 months of January. As we step into the budget, which are those spaces or which are those pockets, those companies, those themes that look best placed for gains over the next 2 or 3 years? Something that you can invest in right now and hope for gains over a 2 or 3 year period.
I think distinctly a couple of themes immediately come to mind, and those are, of course, generally this will sound very cliche, but financialization as sort of India grows from being matured from physical assets to financial assets. The transformation has been in fact happening quite faster than a lot of people thought about. So of course you can't miss out on companies in the AMC or the insurance sector. Of course I won't talk much about banks as it's a plain vanilla buy, but a lot of these insurance companies, we have been playing this theme since last one and a half years, and how it has panned out, the general insurance as well as the life insurance candidates. This theme for the next 2-3 years, I expect that 1 or 2 companies from this universe would in fact be Nifty components as well. So I think a lot of market cap seem to be getting created in this type of a space where there is low penetration and low density in India. So one is the insurance sector, which we clearly are bullish on. The second sector which one should focus on is again building materials slash including even cement for a 2-year type of a run, where you can have electrical goods or adhesives or even paints, as well as certain pockets in cement, which probably would do very well. And in fact, if the capex is going to come back, which again has been a false start in the last 4-5 years, there are also certain capital good companies or allied or some allied sectors which will come to the fore. So these are certain sectors which one should keep a watch on, and ideally the proxy plays of these sectors could also start to find place in your portfolio, and this can do well for the next 2-3 years.
Okay, one final question, Devang, before we let you go. Tejas Networks, did you have a chance to look at that, and does that serve as a lesson of sorts? So you're depending on government orders, they're not coming through, or the receivables not coming through, it just becomes a bit of a problem.
Very true. So unfortunately we don't track that, but as you rightly said, wherever there is a dependence on government, one sector which we have been avoiding has been a sector where you need a lot of government interference or a lot of government dependence for that sector. So ideally just skip that type of a sector which is overly dependent on orders coming or not coming, and would be very speculative to look at budget in that way. So ideally your plain vanilla buys, companies which are proxy plays to infrastructure, MNC space, companies like, not recommending but just giving examples like 3M India, Honeywell Automation. These are classic cases of being beneficiaries in an indirect way if the economy comes back to track. So I think this can be some candidates which one can look at for a longer term.
Okay, Devang, we leave it at that. Thanks much for taking the time out and being with us. Appreciate your time.
Thanks, Neeraj.
I will ask Manav about his view on Tejas 2, if it tracks it. But before that, Sumit spoke to Sanjay Nayak, the MD and CEO of the company, Tejas Networks that is, on the government order book and the international business, and here's what the management had to say.
India government business has been extremely weak for us this year. To put things in perspective, last financial year, India government was 55% of our total revenues. And in the 9 months of the year, we have seen an 86% decline in that number. It's not that we have lost any business, it's just that that business hasn't happened because of all the troubles in the spending part from BSNL and other government customers. As far as the other aspect of our business is concerned, the India private and international, which is what we call as the run rate business, that has actually shown a 10% year-on-year growth in the first 9 months. And the third part I would like to call out is that as a company, we understand that India as a market, while long-term is a good market, is going to go through a lot of turbulence in the short term, and all the reasons are known to everybody. So we have been consciously trying to make sure that international becomes 50% of our business in the medium term. So this financial year, and including in Q4, we do see a big uptick happening on the international business. So again, what it's likely going to be by the time we finish the financial year is that last year, India was 79% of our total and international was 21%. This year, we expect international to cross more than 40% of our total revenues. Actually, in Q3, international was more than 50% of our revenues, and in Q4, we expect, again, to be more than 50%. I would not think that there's a slowdown per se, because there is a little obvious lumpiness in the order sizes given the small base that we have international. The reason for our confidence for Q4 in international comes from 2 different angles. Number one is that our existing customers, who are our incumbent customers, since this is Q1 for them, we already have visibility of orders from them, and that's a pretty a good number of orders that we have in our hand in terms of what our existing customers will have. In addition, actually in Q3, we've actually closed a few large deals. where technically and financially, commercially, we have won everything, except that the physical purchase order is not in our hands. We expect that to happen in the next few weeks. And some of that deliveries are going to happen in Q4 as well, based on the customer requirement. So given these two things, we believe by the time we close Q4, we will have a significant uptick in the international revenues. And if you see, the absolute numbers is not very big. So once the things that I mentioned actually happen, we would see that the international business for the year, on a total basis, while it was down 17% on 9 months, we expect that it will be 30 to 40% up by the time we finish the year.
Manav, you want to come in on Tejas Networks and how weak is it looking?
See, the prices have been in a series of downtrends since September 2018, and I haven't seen any respite for the stock. In fact, since past a few months, the prices are trying to consolidate and form a base, but there's no clear evidence for any trend reversal or a bottom formation. We would have to see a decisive price breakout above the levels of 100. It's when there could be some initial signals for a trend reversal. Till then, I think it's better avoid this stock. It has the lower end of the support is at the levels of 70. So we could see the stock consolidate in a broader perspective between 70 and between the 70 and levels on the upside, which would be 100. But I still have a negative bias, so it's better that one should avoid this stock and get
Well, and I can understand. I mean, it's difficult stock to give a comment on as well. I also want to comment on some other names, but just want to mark Motilal Oswal as a stock. Could be reacting because the numbers are out for that company.
165 crores is the net income. Net revenue is about 696 odd crores.
I think if it's 165, then it's a substantial uptick from what it used to, from what it had delivered in the last quarter. That was, I think, sub 40 or 45 crores, if I'm not wrong. And maybe, which is why the stock is showing the reaction that it is showing, up 3%, because this is a really strong display on the bottom line from Motilal, on the NII from Motilal Oswal. Let's wait and watch if we get some of the other parameters out. But suffice to say, I mean, the stock price reaction is also showing that maybe the street likes the numbers, and if my memory serves me correct, a very good net profit number, 165 crores versus what was in the previous quarter. I don't think there were estimates here, but just the reported numbers seem to be pretty decent. So do watch out for Motilal Oswal as a stock as well. Has rallied quite a bit, though, you would have to say, but these numbers probably do justice. We'll wait for the other internals to come out before we talk about this.
I think in the last 3 months itself, the stock has moved up closer to, I remember being somewhere closer to 640 odd from where it's gone up substantially, about 40% rise from levels of 600, I think October. That's where you have it, around 600, and then from there now to about 878, where it's trading right now. Remember, not an extremely liquid stock, but you're seeing some amount of pickup in the volume action as well, post the numbers that have come in right now. So 39 crores, actually 40 crores was the number last time.
Yeah, my memory serves me correct now. Sub 40 crores or thereabouts, and currently about 165, 168 crore, whatever the number is. It's a very strong show put up by Motilal Oswal. Richard, on the charts, Motilal Oswal.
Recently, the stock has started a high top, high bottom formation, and that formation is still continuing. So the short to medium term trend for the stock continues to remain positive. The 20 days exponential moving average support is placed around 830, 835 range. So till the stock is trading above this support, I think the stock should continue its momentum on the higher side.
879 and 880 and counting. Do watch out for this stock as well. On to more stocks just before we get in one more voice, and I think we'll also get in somebody from Davos. But remember, the big talking point has been PSUs today. ONGC, Coal India, NTPC, Power Grid, all of them have corrected because there's news flow that the CPSE ETF tranche FFO6 will be launched, I think, on the 30th, and that would mean that there'll be fair degree of supply that could come in, as a result of which these stocks are correcting. Top 4 names, losers, Manav, are the PSU names. Not asking for all 4. The one that is looking the weakest, ONGC, Coal India, NTPC, Power Grid.
See, we have already seen a good amount of decline coming in ONGC, but Coal India has given a fresh breakdown from its weekly support and its long-term averages. I sense this stock still has some more room on the downside. It can see further declines towards the levels of 180, and since the overall trend for the stock has been quite negative, and looking at even at the current levels, one can look to initiate fresh shorts Stop loss can be placed at 197 on the upside with lower targets of 180 levels.
Okay, so that's on some of these names. I think SBI Life numbers are also out, so we'll just wait for seeing how those numbers have looked as well. Remember, after ICICI Pru's performance, it was interesting to see what SBI Life does and then what HDFC Life does as well. We'll wait for these numbers to be flashed on your screen, but I think the terminal is already showing that SBI Life numbers are out. We'll just wait for those numbers. Keep in mind,
390 crores.
390 crores is
what we got from the terminal. That's the net profit number for Q3 for SBI Life.
Okay, so that's the net profit number, but I think in case of life insurance companies, viewers, remember the internals, the VNB margins and all of those factors would be key determinants of what the stock does in the near term. So you got to keep that at the back of your mind. Don't just plainly react on the bottom line numbers. As important as they are, the internals would be very, very important. At times could show a slightly divergent trend to what the reported numbers would be.
Even the gross premium and the increment there, what's the variable there? Because I think ICICI Pru had a 9.2% increment in the gross premium. AP was up about 1.2%. See what comes out for ICICI Pru on that front.
Well, so 3.5% for ICICI Pru because of the fact that all of those factors, including a VNB margin growth, was about 9%, which is great. And now we have known that for SBI Life, the AP growth has been strong. Remember that all through the last 3 months, the AP growth numbers for SBI Life have looked strong. The question is, can it show in the quarterly numbers? That's the key thing. 3 months, the stock has hardly done anything, but in the 6-month period, I think it's gained quite a bit. So since the last 3 months, it's been consolidating, even though it gained about 28 to 30% in a 3-month period preceding November. So the question is, can it do more now?
All right, so the 9-month new business premium for SBI Life is up 35% year on year. That's about 128 crores.
Wow, so 390, and that's a good number. I think the reported number, Devina, I've heard you correctly, 390 crores if I'm not wrong. That I think on a comparable basis was 270 or 280 crores if I'm not wrong. So I think on that front too, seems to have done reasonably okay for itself. 1.2%. I don't quite know if it's in the price or no, because the insurance companies have run up so much, being buoyed by the FI buying that has happened into some of those. Be interesting to see if SBI Life can do more on that front or no. There's a very nice story that Forum has written. Forum Bhatt, my colleague in the research team, has written about how SBI Life has beaten some of its peers on a number of counts, and analysts believe that it can continue to do so. So this quarter numbers, any indication? They perform well. The question is, can they continue doing this? So we'll of course wait for the other internals for SBI Life to come out as well. But Manav, these companies, ICICI Pru and SBI Life, the two of them, which are of course in news today.
Yes,
okay, hang on. We need to cut across to Davos, where Menka is in conversation with Mahindra & Mahindra MD Pawan Goenka. Menka, over to you.
Watching BloombergQuint here in Davos at the World Economic Forum's annual summit, and I have with me Dr. Pawan Goenka of Mahindra & Mahindra. Dr. Goenka, thank you very much for joining us. Let me start by asking you whether you think that the worst is over in the Indian economy. I know you want to talk about Davos. I want to talk about the Indian economy. Whether the worst is over, not just from your industry point of view, but broadly consumption, declines are bottoming out.
I think the general belief is that the worst is over. My colleagues in Mahindra and industry colleagues, and we would start to see a climb, but a slow climb.
Okay.
Unless some very destructive measures are done in the budget, which is going to be hard. We are going to see a slow climb, but climb.
What's the data that's giving you this? Because I must say, I'm not questioning your, conviction. The data is so confusing sometimes when you look at it, right? Like we've just seen recent bank credit or credit growth rate data, very, very slow. So we're wondering what sense to make of this.
I think more than data, what I look at is the sentiment in people. And when I say people, I'm not even talking consumers. How our dealers feel. What's the body language when I talk to dealers? How do our own salespeople feel? And the optimism that I see in them in the last 5-6 weeks, I have not seen in the last year and a half.
Okay.
And that's what is giving me the feeling that we are all right. I'll tell you one more thing. In Q4, we have increased our internal volume forecast 3 times.
Wow.
Not a huge number, but all the same increased 3 times, whereas till 6 months ago we should decrease 3 times. So that's what is giving me an optimism that probably reverses.
And that's a useful specific, right? Because it's just not, I mean, economies are tough to measure
that's
on
right.
feel and
Data can always fool you and tell you whatever you want to hear.
Exactly. You said, more optimism in the dealer network. We were looking at some of the data between wholesales and retails, right? So I think if you look at the SIAM data and you look at wholesales, there's, a double-digit drop in sales, depending on which category you look at, across passenger vehicles. If you look at the retail data, which is registration data, there's about a 4% drop. So, I think the assumption, or rather the conclusion we've reached, is over the last year and a half, the bulk of the auto slowdown problem seems to be overstocking in the previous year and then destocking from the inventory side. Would you agree with that now that we've had some time to look back and sort of figure out what the issue was?
Overstocking is not something that was done by design. Yes,
no,
you're
sure,
right.
I understand.
Yes,
no,
you're
who
right.
would do
it
that by design?
Yeah. But it's
just
because,
optimism or expecting
because sudden slowdown. And when there's sudden slowdown in the industry, then all the plans that have been based on a certain volume growth go all haywire, right? And manufacturers are not able to stop production quickly enough because there's a whole backward linkages that you have to not end up with a lot of inventory. But I must say that the inventory for the whole industry, not just for Mahindra, going into this quarter is about the lowest that I have seen in a long time.
Okay. Yeah, the reason why I'm even dwelling on all of this is because it gives us a sense of what went wrong maybe, and therefore what can be corrected in the next 6, 8, 10 months for the industry to get back on its feet.
But let me just point out that a 4% degrowth in retail is not a good news. So we cannot say it's all because of overstocking.
No. I'm not suggesting that contraction of 4%.
There are many factors that have gone into the slowdown. Only one of which is overstocking that happened in about a year ago.
And what would you think the other factors are?
The biggest factor is the increased cost of transaction for the consumer. Again, there are many factors that have contributed to it, but that's the single biggest factor why people are shying away from buying a vehicle, one. And two, some kind of confusion about BS4, BS6.
So should we buy now? Should we wait and buy later?
Should we buy later? Will my vehicle be allowed to be registered after?
Will it become redundant?
I don't know why, because there's absolutely zero constraint on using any BS4 or BS3 or BS2 vehicle, which has been purchased before 31st March 2020.
Correct.
And therefore the confusion is
And in fact, one would have thought that some of the sales would get advanced because BS6 will bring in higher costs, right?
We're beginning to see the signs of that now.
So now you're seeing people say, okay, 3 months mein badh jayega, so let's move and buy something.
So I had mentioned in a TV interview about a month ago that in the month of March, rather than discount on BS4, there'll be premium on BS4.
Okay.
And I think we're heading to that because most manufacturers were very conservative in how much BS4 vehicles to make, and therefore BS4 stock is quickly running out.
Okay. So the second half of this financial year, which is FY20, you were expecting some recovery in both tractor sales.
I've never seen so much sunshine.
I know, isn't that lovely? Yeah, well, I think they heard they noticed your optimistic mood on the recovery in auto sales. But you were expecting recovery in tractor sales, and you were expecting better performance from the UV category. Does that hold? Is that something that you would like to, in fact, up? Because the mood's changed?
So tractor sales are still down. They're down by about 11-12% for the industry in the first 9 months. This fourth quarter, we do see some uptick happening, but not enough to make up for the loss of the first 9 months. So therefore, we're going to end up with roughly a 10% decline in the tractor industry. I would expect that once the Rabi crop revenue starts coming in, which should be good, we will see again then a pickup happening in about June, July time frame.
Okay.
Something in February, March, but then bigger one in June, July.
So FY21 will be much better than FY20, right, Dr. Goenka? I mean, you'll be over the BS6 hump, hopefully. I think the sentiment will have recovered a little bit. Growth will look better, thankfully, only because of base effect, if nothing else. And I'm assuming you've got new product launches that you all have spoken about in the past.
Yes.
In the second half of next year, right?
There are 2 or 3 sort of unknowns that could sort of put a dampener. So generally what you said is true. We do expect FY21 to be better than FY20, but we still don't know what will be the overall impact of BS6 price increase. Okay, and whether the consumers will definitely delay their buying somewhat, whether it's 2 months, 3 months, whether it's 6 months, 9 months, or whether they say, we won't buy. Okay, I hope that it's not a very big impact, but there'll be some impact of that. There would be in the truck segment right now, and the slowdown does continue, and that will not quickly change because that depends on whole economic activity to recover, right? And for us specifically, we have new product launches, like you said, that should give us good volume. So if I was to put in sort of look in the crystal ball, I would definitely say that FY21 will be better than FY20. That I don't think anybody will disagree with that statement. How much better, we don't know. And it certainly won't be uniform. Some companies will do much better than others, but everybody should do better than FY20.
Yeah, Dr. Goenka, 2 questions before we get to broader economy budget question, if at all. One is the M&M stock has done worse than most of its peers. How do you view that? I know someone in your leadership position doesn't look at weekly or monthly or quarterly, performance of stock prices, but nonetheless, I'm sure it's somewhere playing on your mind on what you can do strategically. And that connects to my last question. This is your last year of leadership. What is the unfinished agenda for Dr. Pawan Goenka?
So, if you look at 12 months, yes, the share price has not done well. But if you look at a little bit longer time span, then we have done very well. So last 12 months have been somewhat bad for us.
All data we can check and look.
So data can prove anything.
I won't dispute that point.
Data can prove anything that you want. Okay. If I look at 25 years, we are the best performing stock.
All right, fine.
Okay, but having said that, there are 2 or 3 factors that are playing on the minds of consumers or the analysts, because of which our share price perhaps has done worse than the auto index. Okay. One is that we are a predominantly diesel portfolio. Correct. And there is a concern that with the BS6 and higher price of diesel vehicles, will we be impacted more than others? Okay, fair question to ask. What is not understood very well is that we have, over the last 3-4 years, worked very hard to create a good gasoline portfolio, and we already have 2 engines launched. We have a third one to be launched about 6-7 months from now, and therefore we will have a very strong gasoline portfolio.
So can you give me a percentage breakup or a proportion breakup?
Right now we are still predominantly diesel.
Yeah,
so
I know.
Right now,
so 90% diesel.
90% diesel.
But you will be, let's say, what percent gasoline in a year or two?
40-50% for
40-50%
sure.
in a year or two.
For example, XUV300, where we have petrol and diesel both offering, we have reached about 50-50.
Okay, fine, fair.
So we would get to that point almost all vehicles.
So that's one concern.
Once they understand that we have very strong gasoline portfolio, sort of WIP, then I think that worry will go over. Second concern is coming from the agri side, okay, because agri slowdown also has an impact on our share price, and for some reason there is a belief that we have no upside potential because we have a very high market share.
Correct.
43-44%. We have the highest profit margin in the industry. So we are paying price for very good performance.
Correct.
In a sense. But I do believe that some of the bets that we have taken in agriculture, which is the international expansion, and that's also a cause of worry right now because most of our international investments yet are not paying off. But these are always long-term bets, and one cannot expect to invest internationally and get a payoff in a year or 2 years. So that's our long-term bet, which will compensate for sort of not too much more headroom for us to grow beyond the 43-44% market share that we have. And third big worry, which is causing our share price to be subdued, is SsangYong, where the performance in the last 6 to 9 months have been poor.
Yeah.
Though, strangely, the total weightage of SsangYong price on Mahindra price is very low. But psychologically, it seems to have a bigger impact.
This is your diagnosis of why
there are 3 factors that I would say why share price.
So let me then come to your last year of leadership. It's been a long, successful stretch at M&M, and I think you've watched this company and led this company grow into, a variety of different segments. What is the unfinished agenda of Pawan Goenka?
There's always...
How much are you going to cram into 1 year?
There's always a lot to do. There's always, if you take the clock back and say, take me back 20 years, I would do many things differently, and that will be true for anyone.
Give me an instance.
I won't be able to, not on TV, but there will be many things that one would wish you did differently, and that will be true for almost anyone,
sure.
not just for me. In the last 1 year, obviously, like you said, that there's no need to cram things because there's a leadership continuity. So people who are going to be running the business in the leadership position are people that I have worked with all through, and it's not like they're going to have a very different agenda than what I did, because my agenda was formed by the same team, and therefore there's no reason for me to kind of go into a sprint. We have to continue the pace that we have been continuing. Few things we do more aggressively, not because it is my last year, but because it has become more important in the current situation. So we do more aggressively, but that's about it.
That's it?
That's about it.
So you're going to have an ordinary
I'm going to have an ordinary last year.
Well, I must say this, we don't say this for too many companies, but it's quite refreshing to watch a non-dramatic succession plan. Thank you very much, Dr. Goenka.
Non-dramatic means that we are very well prepared.
That's exactly what I meant. Right. It's lovely to watch a non-dramatic succession plan. Right. And I'm sure we'll get a chance to catch up with you after you're done with M&M to find out about all the things that you would have done differently.
3 months from now, what is my last year plan? Maybe I'll have a little bit more to say, but right now I don't see anything significant changing in the last
3 months from now in Mumbai, definitely. Thank you, Dr. Goenka.
All right.
Thanks so much. Bye.
Well, that's the view from Pawan Goenka of M&M. Okay, let's talk about some other stocks. What's come off today is Polycab. The question is, does it give one a chance to go out and buy? Because it's now down 8% after a 5% downtick the other day. That is day before yesterday. Yogesh Mehta of Yield Maximizers joins us on the show. Yogesh, do you have the space within your coverage? Polycab, and I'll add on the peers like Havells and KEI as well.
Yes, Neeraj, I do track all three. What I would say that post the numbers, Polycab has already run ahead of the results, and the move was very sharp. Even though with the expectation of at least the growth of 18 to 22% growth rate was expected, which has been delivered, but we have seen some kind of a profit booking because the valuation and the projection for the next financial year even will be a subdued toward 15-16% because of this run up. So I think the moderation will happen for a time being. Nevertheless, we have seen a sharp reactions in a day only on the preceding day of the result. But nevertheless, around again 850 to 900 would be again a good opportunity to get into the stock, because the opportunity for 15% growth rate over the next 1 or 2 years more is still visible, and it's a core domain, 16.5% kind of a market share into the wire business, which is a concentrated business. Wherein Havells, they've got diversified business, and they are as a capital good company, and they are diversified to many more things. They are now coming out with the refrigerator in the next quarter. So they are in a whole host of things. They are competing with the cable wire businesses. They are competing into the electronic appliances and all. So all this together, I think Havells has somehow lost their focus on where to earn money and where the business focus should be. So I think Havells at current juncture with high ROE and ROC of course, but I think on the valuation front, it will be a little expensive. Stock may remain subdued, will not give much of a return for next 2-3 quarters. So one can avoid that. And KEI, a very consistent performer into the wire business, and the growth and exports both are doing well. Domestic as well as export both are doing very well. I think 530.40 current level may be a good opportunity again to start accumulating the stock at this juncture. And I feel 18-20% growth rate over next 2 years is still visible. All the three have come out with the results, so there is no if and but for this quarter. But I can see that for next 1-2 years, both Polycab and KEI is providing good opportunity if at all there is any correction.
Okay. What's gained is Z Entertainment, despite the issues that people seem to have with the related party transactions. It's 6% higher after the 4% uptick the previous day. Anything in the results that would make you believe that Z warrants this buying, Yogesh?
No, Neeraj, we have discussed earlier also in previous interaction that around 260, 270, it's a good opportunity to buy. This is the third time it has touched that level and bounced to for 12% return. But I think overall it would be a kind of a short seller's position, and there is a one-off outstanding receivable which has been postponed for next 2 quarters, and that's why we have seen some hit on the margin on the PET side, and which is in turn on the margin side. I think, but overall business, the ad revenue which has been degrown by 17-18% is not a good sign for this company. And I think if I holding it around 250, 260, it's a buy, but it's not a portfolio stock. One can look at exit around 320 or odd level, because I don't foresee that the business will grow with the liquidity crunch they are facing right now, and they are not still out of the woods. So we'll be there for 2-3 quarters more. So one can simply avoid investing into, or if anybody's holding, I would suggest that they can very well take this opportunity to exit.
Well, I know we've spoken about Z a number of times, just that the kind of reaction that the stock has shown just warrants that question in the session today. Now, before we get into our experts for the closing strategies, time to get in Darshan Mehta to talk about what is it that he is gleaning from his dealing room sources. Darshan, good afternoon.
Yeah, good afternoon, Neeraj, and all Nifty companies that we speak about today. First one, Asian Paints, pretty much trading at the day's low. But overall, if you're looking at the company that came out with numbers, pretty strong sort of numbers that came in a rather weak operating environment. The company came out with a double-digit volume growth, low double-digit volume growth. The expectation probably the street was having was a high single-digit growth, even though that the product mix is slightly inferior. Dealers believe that the commentary is positive, and they expect some bit of analyst upgrades to come in on the counter. So Asian Paint, Z, it's up almost 6%. Now remember, almost half an hour ago they started with the analyst conference call. The commentary that came in was extremely strong in the conference call, and that is why all the sales note that came out did indicate that the commentary that was given was positive in terms of what they expect to do with the business. So Z, on the back of the analyst call, has managed to move up. And two stocks which are down in trade. Axis Bank will report numbers today after market hours. ICICI Bank also rather weak. So dealers expect that post IndusInd, Kotak and HDFC Bank that reported weak set of numbers, the large banks probably will also report weak set of numbers. So the anticipation is of weak set of numbers, and there is a little bit of selling pressure that's happening on both of them.
All right, Darshan, thanks very much for that. So watch out for all of those names. A quick comment from you, Ruchit, on ICICI Bank.
I think within the private sector banks, if you see the broader trend for the stock has been positive. Yes, in last 1 month we have seen some consolidation phase, but on a longer time frame chart, this consolidation just seemed to be a time-wise correction within an uptrend. We could see levels around 510, 508, which is a good support for the stock. And in case if we see any kind of dips towards that 510, 505 range, I think that should be a good buying opportunity again.
Okay. What about stocks that you would trade? Closing strategies. Ruchit, I'll come to you first. Your top closing strategy.
I would recommend going long on Just Dial from a BTST perspective. Primarily, the stock has given a breakout above 600, which was its immediate resistance, and also in derivative segment, we have seen open interest addition of 8% today, which indicates a fresh longs formation. So I think we should see a follow-up move since the price are giving a closing above that breakout level. So go long on Just Dial for BTST. Keep a stop loss below 589 and expect targets around 620.
Okay. What about you, Manav?
Yes, I'll have a sell call on Maruti. In fact, it will be like an STBT. Prices have breached its important support levels and violated key support zone. There is a significant amount of open interest, which also signals for fresh short positions which have been created at the current zone. Looking at the volume, it further confirms the same. So it's a sell with a stop loss of 7180 on the upside. We could expect lower targets of 6950.
Okay. A short call on Maruti and a long call on Just Dial. Just Dial is really inched up. I don't know if it's the there's no comparison because the businesses are different, but I'm just using internet-based businesses as an example, and the relative valuation that Just Dial has, which is not in a growth trajectory, versus an IndiaMart Intermesh has, which is on a growth trajectory. And I don't know if that's leading to this one moving up. It's just doing a basic numbers and of the sales to the market cap, and IndiaMart Intermesh is a market cap of 6.5 to 7,000 crores with the annual revenue estimates of FY20 of 630 odd crores. So a dramatic valuation multiple difference between both the companies. Yogesh, you track IndiaMart Intermesh fundamentally?
No, Neeraj, haven't seen it. I haven't looked into the IndiaMart Intermesh.
Okay. Okay, Yogesh, what do you anticipate the impact of this follow-on CPSE ETF offer to be like on some of these PSU names, because all of those are down today, ONGC, Coal India, NTPC, etc.
Overall, the PSU basket, which is comprising of CPSE ETF, none of those are very much attractive in terms of the growth. Dividend yield could be the story for government, but I don't foresee there is any further growth apart from one name, which is IOC. But again, it has come down significantly towards 110, 115 levels. So only one stock which I see value. Otherwise, PFC, REC, all host of companies are still struggling for their outstanding receivables from the different states. So overall, I don't foresee that if this is a follow-on offer comes for this for 6 or 7 times, perhaps, I'm not sure. But this is just, they are just encashing this opportunity for retail investor to give a 2.5 to 3% discount, which is going to add some more positives for the balance sheet overall for the economy in terms of curtailing fiscal deficit to 0.000%. But overall, I think it is not a good thing for investors to again get into, because last CPSE tranche was around 2470 and today the price is 22, and still they are announcing the CPSE OFS, but I don't foresee there is any value into that for retail investors.
Okay, we'll leave it at that. Yogesh, take a moment to thank you for joining in today and giving us your perspective. Appreciate your time. A couple of stocks which are very active. Max India is up about 7%. I wonder what the Max Group is doing. Max India, Max Ventures, Max Life, all three should come up on your screen. Max India is up about 7.5, Max Ventures about 54, and Max Financial actually is down in the session today. Any thoughts, Manav, on any of these three names?
See, I haven't tracked this stock since quite some time, but when I'm looking at the chart of Max India, the prices are actually bouncing from its weekly and monthly support levels, and on a very short-term perspective, there has been a breakout from its consolidation from which the prices were trading. It was having its previous resistance at the levels of 80 and having a lower support at 75. So it has actually seen a decisive breakout, and it's likely to also close above those resistance levels. So possibly for at least for a week or so, the prices could see a near-term momentum rally towards the levels of 100. One should definitely maintain a strict stop loss of 75 if holding such long positions.
Okay, let's start wrapping up the markets and then we'll talk about some more stocks. But third straight day of pain, and today's session 2, the Bank Nifty clearly outstripping the losses on the Nifty and the Sensex. I wonder what the broader markets have done, because the market bread too has been negative today, but the broader market should come up on your screen, the mid cap and the small cap indices, and let's see how they are faring. In the red yet again by margin, so not quite outstripping the losses and doing better than the large caps, but certainly under some bit of pain, if you will, compared to the last few days of gains. Let me talk about the large caps though first, and let's show you what stocks have done that and what stocks haven't. So Grasim about 2.5%, Nestle about 1.5%, HCL Tech, TCS, Infosys clearly showing that the market had a bend towards IT names in the session, maybe a move towards the defensive a bit. Adani Port also a sign of that. Bajaj Finance about 0.5%. But look at the losses, and PSU stood out today, didn't they? Coal India, ONGC, NTPC, Power Grid, all of them weak, and selectively autos too, the likes of Tata Motors and Maruti for sure looking weak. Kotak continues to grind lower. ICICI Bank is lower, HDFC is lower, HDFC Bank has gone down too. So I think what's happened to a clutch of these names on the fundamental side on the quarter is now weighing down on some of the private sector banks and the price performance too. Devina, broader of the spectrum, some bit of disappointment.
Some bit, but in a market like this, when we've already seen the start of 2020 being a period of outperformance from the mid caps and small caps, that is continued. So we're not seeing a cut of about 0.5% like the index. It's a clear case of outperformance that is still continuing for the broader market space. So let's start off with the gainers. We've got PNB Housing Finance up about 3.9%. It's been doing well. Housing finance companies in overall have been doing well post Canfin Homes and the commentary that came in. Fortis is the other one that's done well in today's session, about 4.5% higher for this stock, around 152. The next one is Graphite India. Graphite India and HEG both today's session have done well. 315 for Graphite, good volumes. HEG2 up about 2.5% in this session. Aside from that, you've got AB Fashion, last minute move on the stock, taking it higher to about 3.5%. Some big moves that have come in. And I also want to talk about IndiaMart Intermesh. That is the other stock. This is RNAM, which is doing well, and you've got the the numbers coming out from HDFC AMC, promising numbers. Stocks doing well on the back of that too. IndiaMart Intermesh, the good commentary that came in. We heard the management talking about how the company is likely to do maybe some bit of softness in the next few quarters to come, but they're ready on track for a 15% growth. The stock's up about 14% towards the end of the trading session, so good going for this one. Losing then is Oil India, that's down about 5.5% in this session. You've seen some losses coming into counters like NBCC, which is down about 3.5%, 35 rupees, small stock there. BEL, that's down, Bharat Electronics 4% under and lost a little bit more in the last half an hour of trade. JSPL 3.7% under, 179 on the stock. The big loser there in today's session is Polycab, and you should bring that up towards the end of the trading session. Finally, despite not posting disappointing numbers, is ending the day under 1,000, down about 8.5%. So big profit taking on this particular counter. But today's session and how we've stacked up in terms of the overall close on the index, 12,108. Remember, the 50-day moving average, we've reached below the 20-day moving average. The 50-day moving average now falls at 12,101. So I think we're making our dash towards there. 261 points lost on the Nifty Bank as well.
Yeah, and the market rate too. I mean, it succumbed to being in the favor of the declines early on, but stayed that way. And again, second in a trot, Davina, we are ending with the market rate at the worst possible position.
Right.
And the day, that is.
The point contributions actually should come up as well on your screens. We've got HDFC that's down 20 points in today's session. ICICI Bank, Kotak Mahindra Bank, so the entire financial pack on that end of the spectrum. TCS, Infosys, Z, post the commentary and the media interaction, I think, has picked up. The morning initial tick posted numbers was not all that great, but that's what you've got. Turnover, I think we should quickly just have a look at that too. It's a big number. I think we've got about 17 lakhs in terms of the F&O turnover. Cash market has continuously been hovering around 34,000, 35,000, and that too was on the upper end today, 36,000.
Yep, penultimate day to F&O expiry, good turnover. Final thoughts from our experts. Ruchit, to you first. A word on the Bank Nifty and maybe even a Kotak Bank and the way they have succumbed to selling pressure. Do you see more downsides there?
Overall, if you see, the banking space has been an underperformer in this correction. In fact, when Nifty had hit a all-time high during last week as well, we had not seen the participation coming from Bank Nifty. So I think that's where the concern is for banking space. 31,000 now would be the resistance immediately, and only when we see a crossover above 31,000, I think then only one should expect again this index to show some momentum. Otherwise, on the lower side, 30,500 would be the first support to watch out for in tomorrow's session, followed by the 200-day moving average, which is around 30,100.
Okay. Manav, what about you? And you gave us your Nifty Bank view early on. What about the index and the way it's trading very close to these key moving averages?
Yes, in fact, we have also seen a close below its important support, at least on the Nifty. It has closed below its recent, the previous gap pattern. Looking at the formation, also on the weekly charts, there is a strong bearish engulfing pattern near. That's why I sense, at least for the near-term perspective, 12,400 is a top out for the Nifty, which has been confirmed. We could see some sort of more phases of corrective decline. So since if I'm talking on a broader structure, we have seen a continuous series of rally from 10,600 levels and towards the levels of 12,400. So this broader upside rally, now we could see a phase of at least 2 or 3 weeks where we could see some sort of a corrective decline. On the lower side, I will not be surprised to see if the markets on a broader perspective could test the levels of 11,600. On the immediate basis, if we close below 12,050, that would give us further confirmation. So looking at the current scenario and this week's price structure, it definitely is hinting for a near-term top in place.
We leave it at that, gentlemen. Thanks so much for taking the time out and being with us today. With that, it's a wrap on this edition of Countdown. Thanks so much for joining in. Up ahead, the market wrap coming up.